Thanks for tuning into the Industry Insider series. I'm Lily and I'll be your host today. Joining us, we have Andrew Chick. Andrew Chick is currently the counsellor at the Australian British Chamber of Commerce, specifically the Financial Services Catalyst. He's responsible for promoting business and expansion of companies in the industry between Australia and the UK, and also sits on the board of many companies as an advisor. Formerly the CEO of Australia and New Zealand Royal Bank of Scotland Markets and International Banking, Andrew has an extensive understanding of fields like investment banking and capital markets. He studied at the University of Queensland, completing a Bachelor of Laws and Commerce. Please welcome Andrew Chick.
Thank you.
Thank you so much for joining us today. If you wouldn't mind, we have like a few questions from our high school students, one of them being what exactly is the investment banking industry? For example, in our previous episode, we had a guest who was a partner at a Sydney hedge fund with experience in investment analysis. How's this different to investment banking?
Yeah, so investment banking is really in its classic form, providing advice and raising capital for large corporates. So providing advice like mergers and acquisitions advice, and then raising debt and equity capital, but raising it in a way that doesn't use the bank's own balance sheet, the bank's own money. They raise that money from third-party investors like fund managers, for example. So that's as opposed to commercial banking, which is, the more traditional, large Australian, banks, for example, that provide corporate banking facilities off their own balance sheet. They lend money to corporates. They provide other facilities like trade finance and transactional services facilities to help them open bank accounts, receive money, pay money, manage FX, things like that. And then you've got retail banking, which is mainly smaller individuals and small businesses looking for mortgages, personal loans, credit cards, transactional accounts, those sort of things. So you've got retail, commercial, investment banking, but it's quite confusing because a lot of institutions will bridge multiple aspects of those three areas. So, yeah.
Wow, I did not know banking was actually so big. I kind of knew a bit that we have our own loans, personal things like that, and then banks do their own things, but banking's a lot larger than I expected, I guess. As an advisor and director at many companies, what would you say your schedule looks like and what responsibilities are included in these roles?
So the schedule is fairly, when things are going normally, the schedule is very predictable. Like it's basically a lot of weekly, monthly, quarterly meetings that you can schedule up to a year in advance. Where it gets tricky with a portfolio type career, which I have, is that issues are always arising that are unexpected from various companies. And then you've got to deal with those issues, and they could be anything from, an hour call to weeks and weeks of work. So if 2 or 3 companies are having issues that need to be dealt with in that sort of context, it can get quite difficult to juggle. Yeah. Yeah. In terms of the responsibilities, it's each role can be different, but classically, the role of a director of a company is around the governance and oversight of that company to make sure the strategy and direction of the company is appropriate, make sure the company is solvent and can pay its bills when they fall due, make sure it's complying with laws and regulations, etc. So you have a sort of monthly meeting, to cover those sort of topics and make sure that you are comfortable with the way the business is going, and you use that opportunity to sort of challenge senior leadership within the business to make sure that the decisions they're making on a day-to-day basis are appropriate. Okay.
Yeah, it sounds like things you would probably expect of being a director of a company. I read in an article that you manage a portfolio worth over $20 billion, which is quite a large number. Something that we kind of learn about school, but touch on only a little bit, is risk management. How important would you say risk management is when it comes to, managing portfolios of such large value, and what does that process kind of look like? And would you say technology has influenced the way in which investment decisions are made, perhaps?
So it's very it's obviously very critical,
Mhm.
risk management around those sort of portfolios, because those, that particular $20 billion portfolio, I mean, it's made up of a lot of very large exposures to individual companies and entities. And if any one of those loans, if you've lent, $200 million to a particular business,
Mhm.
you need to make sure that you're going to get that money back. So there's a very, very detailed sort of process around that whole endeavor. And it usually involves, there's an origination team that manages, I guess, winning the business, establishing the customer relationships, doing the due diligence on the customers, negotiating the terms of those agreements. And they'll write up a detailed paper about the company, doing their analysis as to why it's a good company to lend to. And then there'll be a credit team that will provide an independent oversight of what you've written as an originator, where they will, bring their credit skills to bear and, I guess, ask a lot of questions around whether what you've done is appropriate, whether you've asked the right questions, whether you've considered all the risks that might be relevant in this particular case. And then if all of that's aligned, then you go to a committee where senior executives of the financial institution would then make the final decision as to whether it's appropriate to go ahead. And if it is, then you go ahead and you do the deal. And then you'll have another team that will then be constantly monitoring the particular company and the transaction itself. So they'll be looking for things like whether there's something happening in the macroeconomic environment in Australia that would impact that company's business, something happening specifically to that company that's impacting the business, something that's happening to some of the key staff within the business. If there's anything happening with the loan, there'll be terms and conditions within the loan that the company needs to comply with. So they'll check they're complying with that every month. So yes, it's a very involved process.
Yes, sounds very long and many different teams to work with. How long would you say this process kind of takes before, you're constantly overseeing the company with a team? I forgot what the team's name is called, but you mentioned how once you've made a decision in the deal, you also still have a team monitoring that company, seeing those kind of changes.
Yeah.
How long would you say that process beforehand takes to determine if a company is suitable or not?
It's at its very fastest, it would probably take 6 to 8 weeks for a large, transaction like that. But typically you'd want to have a relationship with that company, for a longer period of time. And if the particular transaction is very complicated, it can take, I've worked on transactions that have taken well over a year to complete.
Wow.
From start to finish. Yeah.
Is that more just because of the relationship with the company and getting to know it better, or just because the transaction process is just so long and involves so many components?
Some of it's the relationship with the company. Some of it's the process that might be leading to the need for the money. For example, the company might be bidding for a particular project, which goes through a lot of iterations and a lot of processes that the company's going through to get to the point where they've won the transaction, and then move into closing the financing side of that. So yeah, that can be quite involved.
Sounds like it for sure.
Yeah. And you asked about technology. Technology, I would say, is at the moment less relevant to those sort of big, sort of more bespoke or more structured type transactions. And where we're seeing it more and more come in more quickly is at the consumer end of the spectrum, where you're dealing with smaller borrowers or smaller companies, where there's a higher volume of transactions going through that might be relatively simple, where you're just looking to identify the customer, work out what their credit score is, determine what their expenses are and what their income is, things like that. That's where we're seeing quite a bit of change coming through in terms of using technology to assess those credits faster and approve those loans faster. Yeah.
I guess that makes sense, even though I haven't really thought about that before. I just thought like technology would kind of automate the process, but seeing that it takes so long, perhaps not. over your career, you've had many changes in terms of companies and roles. What are some key skills or values that have consistently led to success from your experience?
Yeah, I'm not sure that I have any great insights into that. You get back to the usual sort of things around, you know, being reliable and hardworking
Mm-hmm.
and those sort of basic skills that everyone will tell you. I guess beyond that, to really progress through a large organization, I think you've got to be always thinking of two things, because you've always got two hats on. You are, a team leader yourself. So you're leading a team, you're leading a group of people. So it's working on those skills around, they call them leadership skills. It's really sort of people skills, I guess, where you're, getting the best out of the team that you have, structuring the team well so that you've got complementary skill sets, communicating with the team so they understand, what they're doing and how their job fits into the broader organization and things like that. And the more powerful you are at those softer skills,
Mm-hmm.
the better you'll perform yourself as an individual responsible for that team. So I guess that's sort of one side of it. And then the other side is you've got to remember you're an employee yourself. You're part of someone else's team usually.
Yeah.
So it's how do you make yourself valuable to your boss basically? And that's around, aside from just, working hard and being good at your job, I think people are really looking for team members that can think a bit more, beyond their day-to-day job, think a bit more strategically about where the business is going, think about how they can make, how you can make the business, generate more income or be more efficient or treat its people better or be better for the environment or the community. All these sort of value-added things that if you're feeding them up to your boss, that will help you progress in your career because you'll be seen as someone who's a bit, someone who's a bit unique and a bit, and I've always thought the best way to progress in an organization is to help your boss progress in the organization, and then you can take their position. So your interests are kind of always aligned, right?
Mm-hmm. That's
Yeah.
pretty interesting that you should mention that, because I think providing value to a business can come in many different ways. Often it's through, like, most obviously your work and what you contribute in that kind of sense, but also I think increasingly community and cultures becoming more important perhaps in companies, with more like events for teams, like things outside of work even, or just in the workspace that aren't related to work. For example, I know companies like Google and Atlassian, they have table tennis things at their offices, which, don't immediately correlate with work, but I guess having that culture and having work being an important part, but also understanding that there are other integral parts to, I guess, life, is, I guess, an increasing trend amongst companies, and seeing that is a pretty cool trend, I think. Juggling so many roles at the same time, how do you manage your time and work-life balance, and what is it like to be a chairman or former CEO?
Yeah, right. The work-life balance one's an interesting one. I don't love that term because I guess work is part of your life. And
Yes.
work, it's a really big part of your life. Actually, you'll find in times in your career you're spending more time at work than you are with your friends and family. So it's really critical, I think, to make sure that your work is actually something you enjoy. I mean, it gets back to that old, that sort of Japanese concept of ikigai, I think they call it, where
The four circles, I'm pretty sure.
the four circles. You're really looking for something you love, something you're good at, something you can be paid for, and something that is meaningful, gives you some sort of purpose, or is meaningful to the world around you. And if you can find something that sort of meets those four criteria, then you won't spend so much time thinking about work-life balance. You'll just enjoy your life, you'll enjoy your work, and it will all be, a part of a seamless sort of existence. But so that would be my perspective on that. Try to engineer it so that you're doing something in work, so you're not always thinking, when's this going to end, and I can get back to fun life kind of thing.
That's a good perspective to take. I agree. What would you say are some, I suppose, positive memories that you have whilst working, perhaps like when you get to have a very good relationship with a company, or things like that. What are some positive moments, I guess, in your career that you remember?
Yeah, I think the positive moments are really around the personal interactions. So it is the team that you work with.
Mhm.
And I think you need to be looking for a team where you like and respect your colleagues and the senior people in the team, and you feel that you are learning and growing as part of that. So I think that's really important, to like and respect the people you work with. The customer relationships that you build, I think, are really rewarding, where you can provide, a service to a company that's really adding value to what they're doing. But that comes down to a personal relationship you might have with the person at that company where
Yeah.
you've delivered that value to. So that can be a really rewarding aspect of it. And I think for me, one of the most rewarding parts of working in the businesses I work with is just seeing them grow as a business,
Mm-hmm.
taking something that's quite small, or you might be even if it's a big organization, you can introduce a new idea or a new product line and see that grow from the ground up into something something big that's making a bit of a difference. So that's what I found most enjoyable.
Yeah, I think the idea of, I guess, being involved in company or organization from like its young stages and seeing it grow and helping it grow is definitely quite a rewarding thing. With some of your more recent involvement in organizations like Wave Money, Payoneer, and QPay, which I think are examples of fintech, what can you tell us about this trend or subset of the finance industry? And are there any other trends that may shape the future of working in finance?
Yeah, so there's an enormous amount happening in financial services in the moment with technology, and it gets back a little bit to the old, that Bill Gates perspective that we tend to overestimate how far we're going to get in a year, but underestimate how far we'll get in 10 years. And I think it's really like that in financial services at the moment. I think maybe 12 months from now, it may not look that different, but I think 10 years from now, which is the time frame that high school students need to be thinking in, I think it will look dramatically different. And we're starting to see, technology coming in to different areas of banking in so many different ways, where you can see that it's going to make, a big difference over time. And that's everything from what I was describing before around, in retail banking, the onboarding process, the due diligence process, the credit assessment process, to, approve loans that used to take, a week, 2 weeks, 3 weeks. You can approve them in 5 minutes, now, because you just put the inputs in, it's an algorithm, it's solved, it's cross-checked with any number of different databases to authenticate who you are and how much you spend, and et cetera, et cetera. So, that sort of technology is quite transformative. But it's all the other little things as well, like, whether it's robo advice coming into, wealth advice, where, traditionally only relatively wealthy people can afford to pay for a financial advisor. But the more you can automate and bring in technology to give people access to that sort of advice, it's open to everyone then. And then what we'll find is that sort of technology will start at the cheaper, lower cost end of the spectrum, and will just get increasingly more sophisticated and take over, increasingly more sophisticated and complicated client relationships. And then we're seeing it in compliance, where traditionally you've had, a lot of work has been put in around, ensuring staff are doing the right thing, ensuring forms are filled out the correct way, ensuring, offering documents and other client documents are touching the right things. And now increasingly, that can be done through, automation. We've got systems that are, people will think it's a bit like Big Brother, but, tracking staff's interactions via email, internally, externally, to work out, whether they're, making appropriate comments on particular things, or talking to the right people, or sending emails to the right place, or, completing files on customers that have to meet certain legal requirements, which previously would have to be audited by teams of people. Now machines can just audit all that automatically to make sure it's all complying. So there's so many aspects of finance that are changing, and even bigger sort of credit decisions. You're seeing more and more hedge funds and fund managers now that are using this sort of technology to make large scale investment decisions for the funds that they manage as well. So
yeah, I think our previous guest also kind of talked about how increasingly with hedge funds that technology and algorithms, once you input the data, they can spit out some numbers, and the process has become more automated in certain aspects for some of the mundane activities, such as like admin and paperwork and files, like things like that, as well as some bigger key decisions.
Yeah. And there's another, I mean, even with the, if you're managing money and credit risk, one of the key aspects of that is what's happening in the economy. And traditionally, if you're trying to track what's happening in the economy, there's a big lag between when you're collecting all of the data and then processing it manually, and then you might get the quarterly result, 2 months after the quarter's finished kind of thing. But now there's a lot more focus on real-time economic data, like what are people doing day to day in terms of spending habits, in terms of employment, all this sort of stuff. So it's becoming a lot faster and a lot more effective.
What would you say is the most challenging decision that you've had to make in your career? Perhaps things like a risky investment or promoting yourself to senior roles, which can be daunting at times, or maybe a shifted mindset in your career goals. What's a big challenge that you've had, and how did you overcome that?
I guess the big challenging decisions usually come out of situations that are not going terribly well. There's quite a lot of decisions that will come up in anyone's career that are quite difficult. I guess for me, there was a very difficult time around the global financial crisis back in 2007 to 2009, because a lot of decisions had to be made around, downsizing an organization, and you're making decisions around, which divisions continue and which get closed down, which teams continue, get closed down. And these sort of decisions, they can have a big impact on you personally in terms of your own career as to how they pan out, those decisions. But, I think even more impactfully, it's got an impact on so many other people's lives around you as well. I mean, these decisions, when you're, impacting large parts of organizations, it's got a real impact on the people around you. And so that they're probably the toughest sort of times. So, I'd certainly do whatever you can to avoid those in your career, and do your due diligence on the companies that you're joining. And it's a lot more fun to work in an organization through a growth period than
that's true. That's definitely true. And perhaps our last question for today would be, what would be your best advice to a young person starting off their career in the investment banking industry? Things that, maybe small skills or just key things to remember. What piece of advice could you offer?
Yeah, I guess the first thing I'd say about that is if you're interested in financial services, don't necessarily limit yourself to investment banking. I mean, financial services is a very broad sort of sector. So I'd sort of, do your research, read the financial press, talk to people, do internships, do whatever you can to get a feel for financial services more broadly, to make sure if it is investment banking, to make sure that is the part that you are most suited to or most interested in. I guess some other things, I wouldn't necessarily shy away from working at a large organization at the start of your career. I get the feeling sometimes the younger people are quite attracted to the startup sort of world, and it's all very exciting and, tech and disrupting and all that sort of stuff. The first thing I'd say around that is don't underestimate how good some of the large financial institutions in Australia are at tech themselves. And I think they've demonstrated over the decades that they've been quite good at adopting new technology to benefit customers at scale. So don't think going into a big organization, you're necessarily going to be isolated from anything interesting to do with technology. And secondly, going into a big organization, you will work with, people who are incredibly experienced and you can learn an enormous amount from. And the organization will have the resources that can support that early learning and growth. And you'll meet people that you'll be connected with for the rest of your career that will help you no matter what you choose to do later on. So I would just, you know, I guess I just don't rule out. In fact, I would almost encourage you to think about working at a large institution first, rather than going straight into a startup. And I guess, yeah, just harking back to the comment before around what's the world going to look like in 10 years. And young people today, they're going to be working in a lot of different areas through their career, and constantly learning and evolving is going to be a big part of that. You know, it doesn't finish at high school, it doesn't finish at university. It's going to be going all through your career. And I would spend as much time now plugging yourself into the Fintech ecosystem, if you like. And there's a lot of ways to do that. There's so many organizations, industry bodies. I wouldn't limit yourself to Australia. I'd look at the UK, I'd look at the US, get yourself on as many, you know, free mailing lists or meetups as you can, because it'll just give you a really good sense as to which companies are winning in this fintech space. Because it's kind of at an interesting inflection point, I think, fintech, where we're going to see, you know, the early excitement around fintech is going to start consolidating into the winners and losers. And I think this is a really interesting time at the moment to be educating yourself onto, you know, who's winning and why. And that'll be really useful information as you go into any career in financial services.
I think you've mentioned some really great points in your advice just then. I guess things that I'll probably touch on are the idea of big firms that are established versus startup culture. I think startups, young people are definitely quite interested in them right now, with so many success stories coming out. Also because a lot of my friends are also kind of involved in high school startups as well. And then we're also made aware of success stories, especially in Australia, like Canva having been a startup and now being quite a large company. I think I myself as a high school student have always kind of been confused on what startups are like compared to big firms. And during the podcast series, we've also had some guests who work in startups and some who work in large firms now. I think there are some clear differences and benefits to both. I think it really just depends on what people are looking for, whether or not you're looking for experience or you're looking for growth and development in a new, potentially exciting sector. That's definitely quite interesting. And fintech is also something that we've been hearing a lot about. So that's definitely something to look at. Yeah.
And I think you can distinguish a little bit between what I would truly call a startup, which is somewhat, you know, a small organization that's trying to do something, you know, different, as opposed to, you know, some of the bigger, you know, so I wouldn't view Atlassian or, you know, Canva or companies like that as startups necessarily. I would view them as larger organizations with a, you know, sometimes they get lumped in with the startup sort of genre, but, you know, full of really interesting, experienced people that you can learn from, you know, as a young person going into an organization. So, yeah, I would include those sorts of organizations as interesting organizations to start out as well, potentially. Yeah.
I guess that is a good point to make. Well, I guess that concludes the podcast episode for today. Thank you so much for joining us, Andrew. We greatly appreciate you taking the time to share your industry insight and personal experiences with our audience. Have a lovely week, everyone, and see you next time. Thank you so much.
Thank you.